Hey guys, how's it going? And in this video we're going to be talking about iAnthus. And yes, I am a shareholder. Why? Because it's a profitable company. When I saw the profit, I was like, no, this is a buying opportunity in my opinion. So, that's why I've been building my position for a while now. And if it keeps dipping, I will keep buying. But I'm only willing to risk what I'm willing to lose. But I feel like this can be a huge return on investment if the right catalyst comes along. Like iAnthus seems so undervalued as a company, and they're profitable. They made for the first quarter of 2021, they made $51.8 million of revenue, up 70% from the same quarter prior last year. Adjusted gross profit of 32.6 million, which is 63% gross margin is awesome. Okay, awesome. They did lose some money, but they didn't actually lose any money. They actually made money. They made an adjusted EBITDA of $13 million, up from 6.8 million a negative loss of last year. The only reason why the net income was lost, I will bring that up later in the video. So, very, very profitable company. I don't know what the stock price is going to do. It could go down to 10 cents again. It can go down to, maybe something bad could happen and you could lose all your money investing into this company. I don't know. At the end of the day, there's this whole recapitalization transaction. So, I don't really know what that means, but definitely do your research on this. But, as we can see, gross profit of 29 million, gross margins of 57.4%. They did do a net loss of 19 million, but I will get into that when I go to the setter. So basically, I would just, before that, I guess I'll talk about the chart. That iAnthus came out 27 days ago. In a month time frame, the stock price went all the way down to 18.5 cents, went down up to 27 cents. So if you bought at the bottom and you sold at the top, you could have made at least a good 50% return on investment. I don't know. I'm holding this for a while. I'm not going to swing trade it. I'm just going to hold on, and I'm hoping, some big player like like Sundial or Aurora or Tilray buys out iAnthus, because it is a pretty attractive investment, and it gives a Canadian player a big footprint in the US by acquiring iAnthus Capital. So I think iAnthus Capital is an attractive investment. Currently, according to this, it has 154 million shares. I don't know exactly, fully diluted. From a charting perspective, it looks like it was starting an uptrend, but now it could fall back down to 20 cents. If it does, I'm buying some more. So we'll see what happens. I'm bullish on the company, but again, there's problems, and at the end of the day, it could go bankrupt. I don't know. We'll see what happens. MedMen actually has way worse of the financials, and they are way more valuable than iAnthus. iAnthus right now has a market cap of $42 million, which is hardly nothing, and MedMen has a market cap of $222 million, and they're losing a lot of money. So let's just quickly look at the report. So from a balance sheet perspective, it's not that great. They have about $22 million of cash as of March 31st, 2021. And they do have about a long-term debt of $161 million. That's the biggest concern. But I think MedMen has way bigger debts than iAnthus. They have a total liability of 33.5, shareholder equity of 29.5 million, and shares. According to this, their share structure is actually 171.7 million outstanding shares. their revenue, their gross profit was 29 million. Their sales and administration was 23. So in theory, they made about $7 million. Wait, no, $6 million of profit. But and then you have to take away this depreciation and the monetization and write downs. These two can be taken off of the list. So in theory, they made $7 million from $6 million off operation. And then I guess there's the interest expense and acceleration expense and debt fees. So they did end up losing money of $12 million. Income expenses. What's income expense? I'm not too sure what income expenses is, but I can look it up. I guess it doesn't really matter. It's a speculation stock at the end of the day. It's speculation that somebody will buy it out or the company becomes so profitable that, you know, it makes it extremely undervalued. Only time will tell. I mean, we'll see where the profits will go. But I think iAnthus has a really good shot of becoming a hugely profitable company. So, and then if we look at MedMen. MedMen looks way worse than what it is, right? MedMen, they have more liabilities than they have total asset. So then their total asset is a negative. It's negative. So, you know, and then as you can see, senior credit facility, 157 million. Operational lease of 96 million. You know, MedMen looks balance sheet looks horrible compared to iAnthus. And iAnthus has just as much cash as MedMen. And then when it comes to revenue, iAnthus is beating them on revenue. They made $32 million of revenue that quarter, gross profit of $13 million, and they lost like a ton of money. So from and then the outstanding shares huge, 500, actually it's probably more than that, 541 million shares. They do have a strong brand, but their balance sheet looks horrible. So in my theory, in my opinion, MedMen is way worse of an investment than iAnthus. But you know, the market likes MedMen more, and MedMen got pumped by CNBC all the way up to $1.65, crashed really hard, and then just been trading sideways ever since. So just saying. And then remember how AMC a year ago I was like saying I was saying at $2 I thought AMC was a opportunity, and people were saying that AMC was gonna go bankrupt, stay away from the company, and look at the company now. You know, it went all the way up to $62.55 because retail investors pumped the daylights out of AMC. GameStop is the same thing, right? When I made a video about it, I was around $4. People were coming to me saying GameStop was gonna go bankrupt. It went as high as $500, almost $500, and right now it's trading at $233. So you never know in the markets. Things can be crazy. Even if iAnthus is having problems right now, I still think that, you know, if legalization happens and iAnthus can be acquired, I think iAnthus stock will explode to the upside in a big way, and you can do like a 10x return on investment easily on iAnthus. In my humble opinion only, not financial advice. I am holding it as a speculation stock for the long term. But hey, this is my not financial advice. So do what you want. But anyways, that is it for this video. Thanks for watching. Subscribe for future updates and have a great day. Bye.